We begin with a better-than-expected jobs report. The Labor Department says the U.S. economy added 223,000 jobs last month, while the unemployment rate dropped to 3.5%. ABC News business reporter Alexis Christoforous is here to unpack this for us. Alexis, this 223,000 number, it's down from 263 reported in November. Both the number of jobs added, the drop in unemployment rate, they're better than expected. Put it all together for us. What does this mean, big picture?
Big picture is we still have a very strong job market on our hands. Hiring remains resilient, but it has started to lose momentum. You talked about that 223,000 jobs added. That is strong, but still less than about 270,000 jobs we've added in each of the past 3 months. These job gains we saw were broad-based across a bunch of different industries: leisure and hospitality, healthcare, construction. Now, the two things, we talk about this every month, that we look at closely in this report: wages and labor participation. Let's take apart wages for a moment. They came in high, but still not as high as expected. Wages were up 0.3% month over month, up 4.6% year over year, a little less than we've been seeing, and that's exactly what the Federal Reserve wants to see, because higher wages can feed into inflation. We're still not keeping up with inflation when it comes to our wages. Also, labor participation, that represents the number of people actively in the workforce. It ticked up just a little bit. That's encouraging news, because we know millions of people sat off on the sidelines during the pandemic and didn't jump into the labor force. So we're starting to see that change slowly now.
What about layoffs? Are you seeing those concentrated in particular sectors?
We're seeing a lot of high-profile layoffs lately, and now it's moved beyond tech. More interest rate-sensitive industries like banking and real estate. So just this past week, Salesforce and Amazon, tech companies, announced thousands of layoffs. But on your screen, you see Redfin, that's a real estate company, Goldman Sachs, a banker, and Morgan Stanley as well, out with lots of layoffs. We should mention those layoffs are not reflected in this report, so we should see that come out in the subsequent reports.
So what does this all mean for the Federal Reserve and interest rates?
Yeah, that's the big question. So the next Fed meeting is the end of this month. This report really just keeps the Fed on that aggressive track to raise interest rates to rein in inflation. The report shows that things are moving in the right direction, very slowly, though. Remember all those interest rate hikes we had last year, and yet still we're adding more than 200,000 jobs a month. This is an extremely strong job market.
All right, Alexis Christoforous, always great to have you. Thank you.
Thanks.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.